Hey, Dennis Tubbergen again here today. It's March 1, 2018. I've got another market analysis for you. Today I want to talk to you about Elliott Wave. And I pulled up a website from Chart School that talks about how to identify Elliott Wave patterns. Now, we're going to do a short video here, so it's going to be a very short topic today. But what I do want to share with you is the predictability of the way markets move. And I want to share with you also some of the eerie similarities that exist between today's market and the market tops back in 2000 and in 2007. And using Elliott Wave, we can kind of interpret this stuff. Elliott was a market analyst that came up with a very complex system to analyze markets. And to be frank, from my perspective, I think it's easier to probably use this Elliott Wave analysis system to analyze what's happened in markets historically rather than where markets are going. In other words, I think it's a better historical analytical tool than it is a predictive tool, but it does have some predictive applicability. Now, Elliott waves, big primary waves, typically move in 5 waves. And you can see on the screen here, this is in an up market. Here's wave 1 up, wave 2 down, wave 3 up, wave 4 down, wave 5 up. So there's 3 waves in the direction of the primary trend, and then 2 counter trend waves. And then there can be waves within these waves as well. And Elliott came up with some tools that are listed here. First of all, wave 2 cannot retrace more than 100% of wave 1. Usually it does not. Wave 3 can never be the shortest of wave 1, 3, and 5. It's often the longest. And wave 4 can never overlap wave 1. So in other words, wave 4 has to start in an uptrend at a point higher on the price chart than wave 1 stops. In a downtrend, it's exactly the opposite. Now what I like to do is, based on that, go back and show you some different times, historically speaking, in the markets. I have a chart here of the market in 2000. Oops, I'll blow it up here a little bit so that you can see it. There it is. My computer's thinking here a little bit. So if we take a look here, first of all, I've drawn in the Fibonacci retracement lines. And if you take a look at this, here's wave 1 down. Here's wave 2 up. So wave 1 down, wave 2 up. Wave 3 down, wave 4 up, wave 5 down, which gets you over here to the market bottom. And if I go over here a little bit more, you can see it more clearly. So we've got wave 1 down, we've got wave 2 up, we've got wave 3 down, we've got wave 4 up, we've got wave 5 down. So it's fairly clear using those rules that we had a 5-wave downtrend with 3 primary waves down and then 2 counter trend waves back in the up direction. Now, if I blow this up again just a little bit for you here, and we look at where wave 1 turned, I've got the Fibonacci retracement lines that we talked about in yesterday's market update. And you see here that when it reached this Fibonacci retracement line, the next wave down started. Now, let's go take a look at the same thing, looking at the market top now, the market top in 2007. Again, I've got wave 1 down, I've got wave 2 up, I've got wave 3 down, wave 4 up, and I've got wave 5 down. So again, you see those 5 waves. And it fits nicely into those rules that we just looked at. The Fibonacci retracement point here, if you take a look, wave 1 down, wave 2 up, again stopped at that 61.8% Fibonacci retracement point. Now, if I pull up a chart of where we are today, this is today's market. I've got it blown up. Could this be wave 1 down? Could this be wave 2 up? And could we be starting wave 3 down? Now you see that as I'm recording this, the market is up a bit today. It's a lizard tail here that is forming so far. That could mean a little bit more uptrend. However, in order for this downtrend now to be intact by using Elliott Wave, you have to make sure that this little uptrend, should it occur, does not exceed the top of wave 2 if this is wave 2. Certainly it's shaping up using Elliott Wave to look like we could be seeing the beginning of a wave 3 down, which can often be the most intense wave. So if you're a speculative trader, maybe you think about buying a put here. If you're a long buy and hold investor in stocks, you might consider tightening your sell stops. None of this stuff works 100% of the time, but there are some very strong similarities here that I think you're going to want to be taking a very strong look at. That's today's video market analysis.